Howdy who, all my stock market gamblers. Welcome today. I'm Tall Mike. It's March 22nd, Monday. Stock market's open. Markets are up a little bit here. Actually, I'm hoping for a pullback. I want to put more money to work in the market, but I think we're going to see a little bit of pressure this week on the markets. We'll see if I'm right. The QQQs are trading at 317. I'd like to see them come down to around 300 so I can put some more money to work. All right, what I want to talk today about is what investors are making a mistake about. Anyways, what they're making a mistake about is gold. All right, so gold, physical gold. This is a gold eagle. They sell for, I don't know, 1,800. Spot price of gold right around 1,700. Now, why is gold going down? Okay, we got inflation. Inflation is actually going up, but gold's going down. Why? Well, investors believe that the Federal Reserve is going to raise interest rates because inflation is starting to go up. So if the inflation goes up, the way the Fed combats that is by raising interest rates. Now here's where they're making their mistake. There is no way that the Federal Reserve can raise interest rates. They cannot raise interest rates. We have $28 trillion in debt. The U.S. will default if the Federal Reserve raises interest rates to battle inflation. They say they're going to battle inflation. All right. No. The Federal Reserve cannot raise interest rates to battle inflation. So what happens then? What happens? All right. So let's say inflation's at 2% right now. And let's just be, say, on the 10-year. The 10-year is about 1.7 right now. 1.7% on the 10-year Federal Reserve note. Okay, for the 10-year. All right. And inflation at 2%. Now, if inflation goes to, let's say, 3, 4, 5, let's call it 6%. Let's say inflation goes to 6%. Now, I already believe it's well above 10% already. But the way the Fed measures it, they say it's around 2%. But let's say it goes up to 6%. How is the Fed going to battle inflation? It cannot. It cannot raise interest rates up to 3, 4, 5, 6%. This would send everything crashing down because the U.S. will default on their $28 trillion. They can't pay the interest now, barely. They don't get enough tax money in to make the payments on the debt, to make the payments on the liabilities. They don't get enough tax money in. So if they have to raise rates, there is no way they can raise rates. Absolutely no way. So what this does, it gives us an edge. We got the price of gold going down even though there is inflation. Now that is amazing to me. That is opportunity. Oh, I hope they knock this down. Right now, spot price, let's just call it around 1,700. Okay, I would love to see them knock it down to 1,500. Every bit they knock it down, it's a gift. They're missing the boat. I'm loading the boat. You want gold. You want to buy gold. You can buy the GLD. You can buy the GDX. You can buy the GDXJ. All of those are good plays right now because investors have it wrong. There is no way the Federal Reserve can raise interest rates. Now I want to talk today about the ratios. The ratios, a lot of people say silver. Now silver is the better play. A lot of people say that because gold, the ratio between silver and gold is about 67 of these to buy one of these. Actually, that's not completely true. In the spot price is about 67 to 1. But because of the premiums on the Silver Eagles is so high, they're going about $35 if you can find them. Even though the spot price of silver is $26, they're going $9 premium. Now, I heard a YouTube guy saying don't buy Silver Eagles, the premium's too high. I completely disagree with that. It's a completely different market. There's the market for physical Silver Eagles, and that market is at $35 right now. So it takes about 50 of the physical Silver Eagles to buy one gold coin. All right, so Traditionally, that ratio is about 30 to 1. So maybe it'll get cut in half. Maybe silver will double and gold will stay the same. Maybe. Okay, now here's another interesting ratio. Right now, it takes about 17 ounces of gold to buy one of the Dow Jones Industrial Average. Dow Jones, I don't know, what is it, 32,000, let's call it. And these are 1,700. So it takes about 17 ounces of gold to buy just one of the Dow. Now, here's the thing. In 1980, it took 1 ounce of gold to buy one of the Dow. In 1932, 1 ounce of gold to buy one of the Dow. Now, if we fast forward the clock, let's call it 2025. I bet you sometime before now in 2025, it'll take 1 ounce of gold to buy one of the Dow. Okay, so if this is at 1,700 and the Dow is at 32,000, what's going to happen? Well, either this has to go up to about 30,000 or the Dow has to come down to 1,700. Now, do I think either one of those is going to happen? I do not. I do not think either one of those is going to happen. What I think is going to happen is I think they're going to meet in the middle. Now, the middle, maybe it's at 15,000. That comes, the Dow Jones Industrial gets cut in half down to 15,000. And this goes up to 15,000. That's possible. But I actually bet the Dow Jones gets cut down more than that. A lot of people say I'm crazy, and I'm okay with that. I'm just telling you my game plan. If you got a game plan, that's great. And I think the Dow Jones might hit 60,000 before it comes down to 15,000. But I bet it's going to come down even farther than that. I bet it's going to come down to around 10,000 on the Dow Jones. Now, it may spike up from here with all this stimulus, but at some point it breaks, and it's going to break hard. So maybe they both meet at 10,000. Maybe gold goes to 10,000. Maybe the Dow comes down to 10,000. And then you have the 1-to-1 ratio. But I do believe we're going to get a 1-to-1 ratio. Now here, let me tell you something else I believe. All right. So right now, it takes about 35 ounces of gold to buy one Bitcoin. Now, I think that gold is the better buy right now. I have nothing against Bitcoin. I think Bitcoin's going to 100,000. I do. I have absolutely nothing against it. But I think the move in gold is going to be a better play than the move in Bitcoin going forward. Now, if you had bought gold in the past, Bitcoin way outperformed gold. No question about that. That cannot be argued. But it's so funny when I see these gold and Bitcoin people fighting. They're just fighting. They just say, hey, gold's terrible, and the gold people say Bitcoin's terrible. No. Yeah, they're both great. You know why? They're both great? Because the Federal Reserve's going to print a bunch of money. Okay, when they print a bunch of money, they're going to send both of them higher. I just think gold's going to outperform from here. We'll see if I'm right. We'll see. 35 ounces of gold right now to buy one Bitcoin. I bet that comes down to some point maybe where it only takes 5 ounces of gold to buy one Bitcoin. So I think gold's a better play going forward. I know all you Bitcoin people, you can hate on me. I love Bitcoin going to 100,000. I believe that. But okay, let's take a look at another ratio. I love to talk about this. Okay, 1 ounce of silver. All right, this is 1 ounce of silver. Now, in 1980, it took about 800 ounces, 800 of these to buy the average price house in the United States of America. 800 ounces got you a house. Isn't that wild? Right now, it takes about 12,000 ounces to get you the average price house. Now, the average price house is right around, let's call it $320,000. But I think, once again, people will tell you I'm crazy. I think the housing market's going to come down. I think silver's going to rocket higher. And at some point, not too far off, I think it's going to take about 500 ounces of silver to buy the average price house in the U.S. People say I'm crazy with that prediction. Crazy. That couldn't possibly happen, Mike. Could not possibly happen. Well, we'll see. I think there's going to be a short squeeze on silver. Now, I know the Reddit boys, they're trying to get that silver short squeeze going, but that's not where the squeeze is going to come from. Squeeze is going to come from the miners. The miners are pulling real money out of the ground, and they're selling it for this cheap fiat money, and that's going to stop. The short squeeze is going to say when the miners say, no, I ain't going to pull it out of the ground at these prices. This is real money, and I'm not going to pull it out of the ground until it hits $300. The short squeeze is going to come from the miners. It's not going to come from the Reddit boys. Well, I hope you enjoyed our little talk today. I'm Tall Mike. I'm a stock market gambler. If you like this stuff, give me that thumbs up. You really like it? Hit that subscribe button. Go ahead and punch it. Anyways, that way we can talk more. I'm going to be back here later in the week, and we're going to talk about more things. That's what we do on this channel. We love talking about this stuff. I do it for the love of the game. I love all of you. Get out there, have a great Monday, and we'll talk really soon. Bye-bye now.